Hello friends, I am Sushil. Welcome to my channel Stock Wizard. Let us today analyze the company name Mukka Proteins Ltd. Can a company that turns fish waste into global profits really be India's next export powerhouse? Let's talk about Mukka Proteins Ltd, the hidden gem swimming in the blue ocean of opportunities. The company incorporated in 2003, Mukka Proteins Ltd is a leading manufacturer and exporter of fish-based protein products, mainly fish meal, fish oil, and fish soluble paste. These products are essential ingredients in aqua feed, poultry feed, and pet food. And the company's fish oil also finds use in pharmaceuticals, soaps, leathers, and even paint industries. What makes Mukka Protein stand out is its strong global presence. With 10 production facilities spread across Gujarat and Karnataka, the company has a combined capacity of 1 lakh metric tons. It exports to over a dozen countries, including China, Indonesia, Malaysia, Saudi Arabia, and Vietnam, and earns about 76% of its total revenue from exports. Mukka Protein also holds up top international certificates like EU approval, GMP+, HALL, HACCP, and ISO 22000-2018, ensuring world-class product quality. As of financial year 2024, fish meal contributes around 87% of the sales, fish oil about 10%, and the rest come from the soluble paste and other byproducts. The company even has a foreign subsidiary in Oman and recently decided to exit its Bangladesh associate to streamline its operations. So, as a global demand for sustainable protein source keep rising, Mukka Protein seems well positioned to ride the wave. Let's talk about numbers. The market cap is around 819 CR. The current price is 27.3. The book value is 14.7, giving a price to book value of 1.86 versus industry price to book value of 3.44, slightly undervalued on this matrix. The stock PE is 18.8 versus industry PE of 22, showing fair valuation. ROE is at 11.1%, ROCE is at 11.6%, decent but not industry leading. Debt to equity is 1.03, which indicates moderate leverage with total debt of 453 CR. EV to EBITDA is at 11.1, reasonably but not very cheap. Priority score is at 3, slightly on the weaker side, showing some financial stress. On the growth, the 3-year sales growth is 9.3%, but operating profit growth is negative at minus 8.6%, which is slightly a concern. Intrinsic value works out to be about rupees 33.3, meaning the stock is currently trading below fair value. In summary, what we can see is Mukka Protein is a niche export-driven player with strong certification and global reach, but high debt and weak profit growth are red flag investors should track. Let us now analyze the shareholding pattern. This shareholding pattern shows the percentage of shares held by different groups in a company from March 2024 to June 2025. Promoters consistently hold the largest share, that is 73.33%, showing strong control of the company. Foreign institutional investors decreases their holding from 6.46% in March 2024 to 2.08% in June 2025, indicating less foreign investment. Domestic institutional investors slightly vary around 2%, showing stable interest. Now, public shareholding grows from 18.21% to 22.71%, meaning that more shares are held by general investors over time. The number of shareholder changes, peaking at 1,47,308 in March 2025, which indicates that fluctuating market participations. Overall, promoters dominate ownership, foreign investors' interest reduces, and public participation increases slowly over this period. This pattern suggests strong promoter control with rising public confidence in the company. Let us now analyze the profit and loss statement. The sales have grown steadily from rupees 409 crore in financial year 2019 to a peak of 1380 crore in financial year 2024. However, the financial year 2025 shows a dip to 1006 crore, indicating some slowdown. CAGR 2019-2024 shows a 28%, which is strong. Operating margins have improved from rupees 23 crore in financial year 2019 to rupees 105 crore in financial year 2024. The improvement is from 4 to 6% earlier, and now it is 8 to 9% recently. This shows better cost control and pricing power, but margins are still modest for export focused company. Net profit moved from 14 crore in financial year 2019 to high of rupees 74 crore in financial year 2024 before falling to rupees 48 crore in financial year 25. EPS increased from 1.1 in financial year 2021 to 2.34 in financial year 2024, but again slipped to 1.55 in financial year 2025. What we can see here is profits are volatile, reflecting raw material cost and export demand fluctuations. On the expense side and debt impact, interest costs rose significantly from rupees 4 crore in financial year 2019 to rupees 37 crore in financial year 2025. This indicates high debt burden which is impacting net profits. On the profitability side, the best year is financial year 2024 with higher sales, margins and net profits. Concern is slightly of current year, that is 2025, shows a decline in sales and profit plus higher interest expense which could pressure future earnings if not controlled. Now, what is the positive side? What we can see is it has a strong long-term sales growth, improving profit margins, and established export market and certifications. And the cons, what we can see for is 2024 slowdown in both sales and profits, and slightly rising interest costs due to debt, and profitability volatility makes earning less predictable. Let's understand the technical analysis. Mukka Protein Limited stock is currently trading at 27.30 as of early October 2025, showing a mild recovery from its recent lows, but still being in the pronounced downtrend over recent months. The stock has corrected by almost 34% over the past year and currently trading significantly lower than its 52-week high of 47.39 with a low of 24.75. The chart displays a clear downtrend channel characterized by lower highs and lower lows since July 2024. Key resistance levels are seen at 29, 32.63 and further above at 36.82, while strong support are at around 26 and the recent low of 24.75. Price action over the last few weeks has been range bound between 26 to 29, indicating a consolidation phase after prolonged selling pressure. However, until the stock breaks decisively above the 29 level, the trend remains bearish with every rise likely to face selling at resistance level. Finally, what we can see is Mukka Protein is in strong downtrend, trading near its all-time lows and facing multiple resistance overhead. Short-term support is at rupees 26 and resistance is at rupees 29. A breakout from this range could set the next direction. Unless there is a strong reversal or volume increases, the technical outlook for now remains on the weaker side. Those considering any trade should watch price action near these key levels for any potential breakout or further breakdown. This is Sushil signing off. Thanks for watching this video and do write in the comment section about which stock should I analyze. Thank you. This video is for educational purpose only and is not a financial advice. It should not be considered as financial or investment advice. Do your own research before investing. If you found this video useful, please do like, subscribe and share. Thank you once again.